Selling covered call options. Welcome, ladies and gentlemen, to selling covered call options. Maybe you've been watching my videos on selling cash secured put options, and now you want to know what to do if you get assigned. And what you're going to do is you're going to sell covered calls. In this video, we're going to go over some of those things. Before we get too much into it, though, there's something I have to tell you about selling covered call options. I have to tell you that this is not advice. This is not recommendations. This is for educational purposes only. It is not advice. It is not a recommendation. It's for educational purposes only. Speaking of education, maybe we should talk a little bit about what is a call option. Would that be a good thing to go on with? Okay, as long as we got this agreement about not advice, not recommendations, then let's talk about what is a call option. A call option is a legal contract that allows the buyer the right to buy an asset at a predetermined price in a specific time frame. The predetermined price is called the strike price. The specific time period is called the expiration date. Days till expiration, expiration period. So a person buys a right to buy an asset at a predetermined price in a given time frame. And we're going to be selling these, right? So how is it covered? It's covered when you own the stock you are committing to sell. Then you are covering your position. 100 shares of stock would equal one option. So that means if you're going to sell a covered call option, per one, you need to have 100 shares of that stock you're selling it on, right? That's how it's covered. But what is in it for you? What's in it for you if you sell this, right? With them, what's in it for me? The buyer of the option pays the seller, in this case you, a premium for the contract. As a seller, you keep the premium regardless of the outcome. That's what's in it for you. Income, baby. There's also a chance to get a capital gains out of it too. So you get some guaranteed income, and you could get, sell the stock at a higher price, which maybe we'll look at a little bit down the road in this video. But what's the risk? The risk of a covered call option is the price of the stock moving significantly past the strike price at expiration. This means that you would have to sell the stock for a lower price than what the market offers. Let's say if you're going to sell a stock at 51 and at expiration it's at 100, you got to sell it at 50. That would be the risk. As long as you're okay with that risk, boom. Let's look at an example. Right, we'll do a simulated example. We're going to pretend that you purchased 100 shares of ticker symbol MO at $49 per share. Are you ready? Are you really ready? I can't hear if you're ready or not, so we're going to do it regardless. Let's take a look at it. All right, so here's ticker symbol MO. You can probably see it right there. And just so you know, this is a simulated trading account. PM for paper money. So all these numbers here, these dollars, those are fake. You should open up yourself a simulated trading account too, so you can practice some of these trades. Now we're looking at ticker symbol MO. And as I mentioned, we're pretending that you bought it at $49, 100 shares at $49. This is today's candle. So we're going to pretend you bought it here at 49, and now we're going to look at selling some sort of covered call option. Are you ready for that? Again, I can't hear you, so I'm assuming you're ready. Whether you're ready or not, we're going to go for it. So going up here on these different tabs, we're going to go to trade, and let's take a look at that. So under the trade tab of the Thinkorswim platform, we see we have a few different options here. Pardon me, pun not intended, a few different choices here. And we are going to click this one, the option chain. When we click this, it's going to give us some more choices. It opens up some more choices here. Again, these are called the option chain. It's going to show you a variety of information on the different options you can buy and sell and information about them. These dates, this is the actual expiration date. These numbers, these are how many days there are until expiration. And this 100 is referring to 100 shares of stock, right? Maybe if you're selling options in some other type of asset, maybe they have a different amount. But for stock, it's going to be 100. So we got 100 here. Well, let's look at the 15 days till expiration. So we open this drop down, and now we see the screen totally changed. We see it's divided into two halves with this column here dividing it. On one side, we have the calls. On one side, we have the puts. Down the center here, we have the expiration date, and you notice it's the exact same expiration date. And over here, we have other expiration dates, right? So we're looking at this specific one. And here, the strike price is down here. Now, we're pretending that we bought the stock at $49. So we'll drop down somewhere in here to take a look at it. And let's zoom in and see what information we can find out. So here's our call side, right? Our option side on the side. Again, our strike price going down here. And we're pretending that the 100 shares were purchased at 49. And then we move across here, right? And we see there's two columns here. One is a lower number and one is a higher number. Whenever you're selling an option, you're always looking at the lower number. That's what you're going to sell for. Whenever you're buying an option, you're always going to look at the higher number. That's what you're buying for. So we're looking at this column, and right at 49, they're getting 50 cents for that contract. But remember, that's 50 cents times 100, so $50. Now, as we move down to 49.50, that is getting $39. At $50, getting $26. At $50.50, getting 19 cents. At $51, getting 13 cents. So it really would be up to you where you would like to sell this at. As long as you're selling it above 49, you're making some money. As I mentioned, the risk is that, let's say you open this contract, you want to take in $39, you sell this covered call at $49.50, but the stock moves up to 52. Well, you're going to sell it here, and you're missing out on this gain. To me, that's not a big deal, but to some people, you know, the good old Mr. Greed gets them, and they don't like that. But to me, it's not a big deal. As long as I'm always profiting, I'm cool. With this particular strategy, right? I'm not trying to hit home runs with this. I'm trying to make consistent profits constantly. So let's look at, let's say, $50 strike price. And what we're going to do is we will we'll put an order in the market that's a little bit higher than 26. Let's take a closer look at that. So $50, we click on this 26. That opens up this basically order window here, and it's letting us know we're going to sell one. The negative means we're selling it. Sell one MO, expiration of 24 June 2022, strike price 50, call. And what price do we want to get paid for it? Well, let's ask for $35. If it doesn't get filled, hey, we can always redo it. So we're going to click this button right here, and it brings up this. We're looking at the order confirmation. It's basically the same information that we were looking at down here, and it just gives us one more chance to review everything and make sure that we're good with everything before we send it. So the order description, we're going to sell one MO 100, right? That expires 24 June 2022, $50 strike price, call option, and we are requesting no less than $35 to do this, sell to open. And then ultimately break even. In this scenario, I don't care if the stock gets taken away from me. So this break even and all this stuff, it's not super relevant to me. Max loss being infinite, it's saying that max loss can be infinite because my 100 shares can go to zero, but that's not really super relevant to me at the moment for what I would be particularly doing. This part is though. We get $35 minus 65 cents, so this is our net credit. Buying power effect means that there's a way that the brokerage has of calculating your buying power. So this is going to take a little bit away from the buying power. Don't worry about that too much because it's a little bit, when you're into more advanced things, you can do that. So now we're just going to send it into the market. Hit send. We see it's over here. Let's go to monitor. Now we see it pulls up as this new trade, unfulfilled. Technically, the way this is set up in my account right now, if you notice, it shows me selling the stock, or excuse me, it shows me selling the option, but I don't own the stock. So technically, if I let this order go through into tomorrow morning, technically I'm selling a naked call option. Right? Covered call option is when I owned 100 shares of stock. But we're doing a simulated example, and since I don't want to do that, I'm just going to go down here to view this order, and I'm just going to cancel it. There's the quick and dirty on selling covered call options. They're a wonderful, wonderful thing to do. I suggest you try them out when you have the proper government entity allowing you to do it however you need to do it. You know what you don't need to have the government entity allowing you to do? Without anyone's approval, without needing any special help, you could go to ihavesuccess.com. You can put your information in here and you can get yourself 3 underused tactics to transform your financial results. These tactics work. I know they work because I use them. I use them myself. I know they work. They're listed in difficulty to implement. Depending on your life situation, maybe the easiest one is going to give you the best results in your life right now. I don't know what's going on with your life. I just know they work. I know that if you're not doing one of them, 2 of them, all 3 of them, implement them. Your life will change. Maybe it won't be overnight. Maybe it will. Some of them won't be overnight because it takes time to implement them. Get them. Get it. It's free. What do you got to lose? You guys have a fantastic day, and I will talk to you later.